All right, I want to bring in Diane King Hall, host of Morning Movers, here to take a look at some key names to watch. And we'll start off, Diane, looking at StubHub. Good morning to you.
Boy, is this one a mover today off the back of its latest results. Heavy pressure on StubHub right now. That stock down 14% at the moment off the back of its latest quarterly results. They had bleeding on their balance sheet, worse than expected, fourth quarter loss, and then they had weak guidance as well. They reported a loss of $1.56 a share on revenue of about $449 million. Both numbers, that loss coming in more than expected. Revenue also down from a year ago. Revenue was better than expected on an adjusted basis. The loss is 21 cents a share, but again, worse than expected. Revenue down from a year ago. Ticket demand a year ago was beefed up by that big Taylor Swift Eras tour, so that helped it then. They did not have it in this most recent quarter. Looking ahead, StubHub says it is shifting its strategy. It's investing in AI tools, trying to build out direct ticket issuance. That may slow some near-term revenue growth. So again, that is not helping the stock. That stock has been under heavy pressure since its public debut, about 50% since that debut here. Analysts are downgrading their views on this one. They tried to call out some things. They say underlying demand is still strong. They talked about the value of tickets was there. And they said if you exclude the Taylor Swift effect, that there was still strength, you saw still growth if you take out that effect. The Wall Street does not care about that right now. Again, the CEO trying to hype up AI and saying there's some long-term platform development that they're planning. They're going to be using AI's powered supply management tools, working on direct ticket issuance. That could also then challenge traditional primary ticket sellers. But again, the story is just not there for Wall Street today. They did pay down some debt during the quarter, so that's one positive there, Nicole.
Yeah, and I saw Oppenheimer does have an outperform, but cut the price target to $12 from $20. It's also lawmakers in the California and New York introducing legislation to try to cap the resale ticket prices. But it's interesting how we're seeing that when Live Nation has done so incredibly well. If you look at the Live Nation chart, that has been on such a great upswing in 1 month. It's up 12%. As really 1 year up 15%. I think most people would take that. Let's turn our attention over to American Eagle Outfitters. I know we're looking at a lot of retailers.
Yeah, so American Eagle's actually under some sharp pressure today, down 10%. They actually did have a pretty solid quarter here, and I've been trying to dig into this to see what's the issue. Now, they did say when they model in terms of their results, they didn't include the SCOTUS ruling with regard to tariffs. Overall, again, they had a strong holiday quarter, adjusted earnings per share coming in at 86 cents. That was better than expected. Revenue, $1.76 billion. That's it's a slight beat there, but it's a jump of 10% on a year-over-year basis. There was brand growth there, marketing campaigns that helped it. Aerie was the standout, their brand Aerie. They saw same-store sales growth of 23% there, so they got new customers there. They had increased brand awareness there for Aerie. Demand was strong across loungewear, intimates, and swimwear. The core American Eagle brand, there's still some small growth there, not enough obviously for the street because you just saw same-store sales up 2%. They had that celebrity marketing campaign, the Sydney Sweeney jeans campaign. They've had the partnerships with Travis Kelce, Martha Stewart. But again, the story is not there, especially when you think about where they're going from here. The first quarter, they projected high single-digit same-store sales growth. So clearly, Wall Street wants to see more than that, Nicole.
All right. And look, we're going to be hearing from The Gap, right? And others, more on Costco. Victoria's Secret is out. What about, okay, away from retail, we're going over to quantum computing and looking at Rigetti.
From retail to Rigetti here. Yeah, Rigetti is under some pressure off the back of its latest quarterly results. That stock down 5%, not as much as the pressure that we're seeing, for instance, on American Eagle or StubHub. This one is a long-term story for investors who are interested in this one. They reported a loss of 3 cents a share. That was in line with expectations. Revenue coming in at $1.87 million, so that was weaker than expected. So it's a mixed bag there. The company is still really early in terms of commercialization. This is the supercomputing space. We've I've used this analogy before. When you think about a regular computer, it's like a flashlight. Supercomputer is supposed to be like the sun. It lights everything around. It solves problems fast. It's supposed to be the answer to challenges in the healthcare space and beyond. But again, right now, in terms of what analysts say, just quarter over quarter, it can be lumpy for companies like this because they are in their early innings. It takes time to scale the pipeline. Now Rigetti said is starting to build. They have a new purchase order from a Japanese research organization. Delivery for that's expected in April. They have 8.4 million system sales to India's National Computing Center. So this is a time story, but right now, in terms of investor reaction, that miss on revenue is not helping the stock.
All right, thank you for that. Down 6% as we speak. Diane King Hall, great to see you. Thank you for that.